Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 22nd of December 2020. And yesterday we reported that gold, for a brief moment, rose above $1,900. And silver, also for a brief moment, rose above $27. But both have since fallen back. For those worried, don't be. As the IMF reports today, sufficient warnings that the economic recovery is likely to be slower than many people think. And therefore, even more stimulus may be required moving forward. So let's take a look. Yes, indeed. Yesterday we produced a video, early in fact in the day, entitled Gold Rises Above $1,900 and Silver Above $27. But will they hold? And we suggested the prices may not do so, and that we should not be surprised if they were to fall back. Already from the start of writing the text for the video yesterday, we saw gold fall from $1,907 to $1,895, and silver from $27.41 to $26.67. Well, the positions deteriorated further since then, and as at 17:05 GMT, gold now stands at $18.65 and silver at $25.29, both below Friday's close, in fact. It's very interesting and noteworthy to bear in mind that markets often move higher on news expectations and then fall back after those announcements have been made. And this is particularly the case vis-à-vis the stimulus package that was agreed in the Congress yesterday. Now that said, one should not be too disheartened. As we highlighted in our Saturday video, the Gold and Silver Weekly Update for the week ending the 18th of December, we should not be too worried about prices, particularly this week, as we can expect some profit-taking after very healthy gains. What is painting an interesting picture moving forward is that as markets have heralded the rollout of vaccination programs, both in the United States and around the world, organizations such as the IMF is warning that our economic recovery, which markets were beginning to bake into their assessments, may not be quite as fast or as extensive as many expect them to be. A short article was published by Bloomberg earlier today. Let's take a brief look at that article. Bloomberg article dated 22nd of December 2020. Headline: IMF warns euro area recovery may slow. Stimulus still needed. The euro area is in danger of seeing a slower economic recovery in 2021 than previously expected, and may need more stimulus as a resurgent coronavirus sweeps through the continent, the International Monetary Fund said. Risks will remain on the downside into the new year, and the timing of a rebound will depend on how quickly and effectively a vaccine is rolled out, the fund warned. It said unprecedented policy responses at national and European Union levels have helped cushion the impact of the crisis. Unless pandemic dynamics change significantly in the coming months, economic activity is set to recover more gradually than forecast, the IMF said in a report after talks with Eurozone members on their common policies. Further fiscal support will be needed, and governments should explore options to enhance the current fiscal rules. For now, the IMF maintained its estimates of an 8.3% slump in the 19-member euro area this year and a 5.2% economic rebound in 2021. A slower recovery will be more likely to produce long-term scarring that could weigh on the bloc in the future, it warned, adding that tensions between the UK and EU over Brexit have increased uncertainty. Britain is due to leave the bloc's customs area at the end of the month, and no deal on arrangements after that has yet been reached. Italy and Austria have imposed new lockdowns to contain the spread of the pandemic, while the UK is facing a surge of infections and a new variant of the coronavirus that led several nations to tighten restrictions on travel to and from the country. Such events are putting a damper on hopes of a quick recovery, even as the first vaccines begin to be distributed. IMF directors praised the EU's next generation aid package, stressing that its effectiveness will hinge on a quick implementation, the quality of spending, and its capacity to catalyse structural reforms. The fund also recommended that capital relief and conservation measures for banks be kept until the recovery is well underway. Regarding inflation, the IMF said, quote, "It is expected to only gradually increase and remain below the European Central Bank's medium-term aim throughout most of the forecast horizon," unquote. It commended the ECB's extra monetary stimulus announced this month, but cautioned that further support might be needed, especially if downside risks materialise. End of article. Now, we fully accept that the IMF is not always the most positive of institutions, and equally does not always get its facts or forecasts 100% correct. But like the World Bank to some extent, it does quite often serve the purpose of delivering bad news before it actually arrives. The good news, though, for American citizens is that Congress finally agreed to a stimulus program that will at least see most people, admittedly not all, through the Christmas period. And we've no doubt another stimulus program will be due, if not expected, towards the end of January of 2021, perhaps extending through to the middle of February before both houses can agree it. And as we've stated frequently, this is more likely with a Biden presidency because of the tendency for Democrats to spend more money than Republicans than a Trump presidency, though nothing can be taken for granted. So what about us gold and silver collectors and investors? When are we going to see a continuing rise in the price of our precious metals? Well, even though generally the start of the year is normally quite healthy for precious metals, the real rise is unlikely to be seen, at least in our view, until inflation starts to raise its head again. And that could, to be frank, be many months into 2021. And that time period could be further extended if Western economies remain lethargic due to further lockdowns and business closures until the COVID-19 virus or variant thereof is under some degree of control. So it's extremely difficult to predict when that is going to be, because one does not really how quickly this pandemic can be at least curtailed to enable people to live, if not a totally normal life, at least something edging towards it. You see, no government has the perfect answer or solution to this problem, and every government is going to do its own thing. We're already seeing major closures occur in Europe, and with the new COVID strain found in the United Kingdom, we're finding more and more countries are now banning our flights and transportation, as well as potentially the couriering of goods, and particularly with the breakdown in the Brexit situation so far with no final agreement made. We're finding lorries are queuing at great extent at the borders. None of this should be surprising and should be expected, even though it's economically very harmful to the economy. Now, there are many forces either acting as tailwinds for precious metal price rises and some as headwinds for gold and silver, but the trend moving forward is clearly upwards in direction. Certainly as far as we're concerned, and by looking at most forecasters, there's two. But as with all investments, there will be positive days and weeks and months and negative days and weeks and months. And particularly as we're going to experience this week and the following week, a period of light trade due to varying holidays, as we mentioned last Saturday, we can occasionally expect more extreme price movements, with every piece of negative or positive news or information having a disproportionate effect on the move in prices. So we have to bear this in mind. We're in somewhat of a false dawn or twilight over the next 2 weeks. That's it for now. We still plan to produce a video each day throughout the Christmas period, perhaps having Christmas Day itself off. And we'll also be producing a few backup videos on Bitcoin and cryptocurrencies. Not because we're fascinated with that subject or we're necessarily recommending it, but it has certainly and without doubt appeared to have captured investors' imagination. And once again, as mentioned, even though the pumpers will tell you it's not the case, we know that it is, that investors are to some degree, not necessarily in a huge degree yet, but to some degree, looking at cryptos as opposed to gold and silver. And we know it's true because we actually talk to investment managers on a regular basis. And they are telling us, particularly with younger clients, that cryptos are more attractive, even though they fully accept that they're considerably more speculative and risky. What do you think? Do share your thoughts. And also tomorrow we'll be publishing a video on the Richard and Greg channel, which will probably be the last before Christmas, where we provide again a final update on Brexit and also the COVID-19 pandemic and variant, and what the latest news on that front actually is. Meanwhile, please, if you haven't already done so, subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.